Hi, my name is Mark Garcia and welcome to my Crushing the Credit Bureau's intro segment on how to increase and develop your credit scores to explode your wealth building plan as well as your personal lifestyle. I'm going to share with you some tips, some tactics and techniques on these video courses that I think is going to shatter a little bit of the myths and understanding that we have of the credit bureaus and of the credit scoring system. I'm going to share with you a little bit about my story. I'm also going to tell you how I've kind of gone through the gamut of credit repair, what I found that works for me and what I found that works for my clients, as well as help me build my real estate investing career. And I'm also going to share with you some things that probably go against what you've ever been taught or what you've learned about credit scores in general. So let's get started on this. Who am I and why should you listen to what I'm going to teach you? Well, let me tell you, about 7 years ago I went through my own credit score nightmare. I was going through a very nasty divorce and had what I like to call the trifecta of bad credit scores. I had a bankruptcy, I had a Chapter 7 bankruptcy that was going place, I had a foreclosure, and I had a federal tax lien. So I really had three major things that were on my credit score that affected me considerably. I didn't just have them happen throughout the range of my credit score history, but actually had them happen to me all at once. And I'll tell you, I went through the whole litany of research on how to find out what I could or companies that could help me get rid of that negative information on my credit scores. Some of it I found very useful, but I was hiring some of the best bankruptcy attorneys, some of the credit core experts out there that exist. I was also doing quite a bit of research on the internet, and what I found for the most part was really not relevant to my situation or was so old and outdated that it just didn't work anymore. And I still find that out there today. So that was the genesis of me writing the book, Crushing the Credit Bureaus. I have a copy right here for you. But we're going to discuss in these video segments a little bit of how I went through my credit nightmare, what I did about it, because once I did gain the knowledge, I was able to take my scores from the low 500s on up to the high 700s and even a couple of them into the low 800 scores, which is really less than 3% of the population have those scores that high. When I was going through this whole process, again, went through the whole emotional gamut that I'm sure any of you who've had a little bit of negative information on your credit card, on your credit reports, that you're really feeling that maybe you've done something wrong, that you feel as though you should be a better person, the whole negative feeling that goes along with it. And really what I found is, yes, there were some things I could have done differently, but I found that the whole scoring model was really set up against us. Meaning that there's things that take place with the credit scoring bureaus that we're not even aware of, that actually work for the big banks and lending institutions and credit card issuers. And what I came to find out shocked and actually angered me. And I wanted to make sure that nobody else had to go through the same ordeal that I did, because there's a lot of information you can find out on the internet. Most of it's not very good. I don't say that because of pride of authorship or because what I've done, but I just tell you that I've been in your shoes. I've gone through what you've searched for to try and find information to get out of your situation. So now that you know a little bit about my story, you'll get a feeling that I'm coming from experience. I am not a professional mortgage broker or banker or anything. I'm actually a professional chef by trade. But what I went through, the information that I found, is so valuable that I wanted to make sure I shared it with everyone so that you didn't have to go through the same thing I did. Before we dive into how to repair your negative credit, and there's actually more to getting high credit scores than just getting rid of the negative information. You also have to accomplish what I like to call credit conditioning. And again, I cover that a lot in my book, Crushing the Credit Bureaus. But some of the reasons that you need to have good credit, and not just as an investor, but also just anyone who wants to have good credit scores. But for real estate investors, I'm going to speak to you specifically, and then I'm going to cover more for the general public. But for real estate investors, as you know, here in mid-2008, the entire mortgage industry has just been in a tailspin. You hear about these banks going under. We just recently had another bank in the Midwest close down. Foreclosure rates are at an all-time high. So really, to get access to the investment money, the investment loans that's available, if you do go commercial, it's even harder than before if they loan on the property. And most of them aren't doing that in areas where the average home price is over $417,000. So if you have a jumbo loan or even just an average home in California, Florida, New York, you're going to find it very difficult, if not impossible, to get any kind of traditional financing. They will finance you, but typically they're going to want 30–40% down, and the terms won't be attractive. So that leaves us for hard money. Well, those of you who've ever been experienced with hard money, same thing. Because of what's happening in the liquidity in the mortgage marketplace, the hard money guys have become much more stringent in their lending requirements, and they're even wanting credit scores to be fairly high. I think a minimum for most of the hard money lenders is about a 620, 650. So to get to those scores and get those loans, yes, the money's available, but it's even more critical now. Because think about it, for those of you who have been investing the past few years, you never had to give your credit score. Most hard money guys, yes, the money was expensive, but if you had a pulse and the property wasn't in danger of falling down, they'd loan you all the money you needed. So there's still money available for real estate investing. Your credit scores are going to be much more important, more so than they ever were. And if you don't have those scores, yes, this is a great time to be buying real estate because of what's happening in the marketplace. But if you don't have good credit, you're not going to get those loans available to you. The other good thing about having great credit scores is there are still some traditional lenders that will lend that don't want the large down payment, that still want a 10 or 20%, but they're still going to want the lenders or whoever's purchasing the product to have great credit scores. Now, you can get decent loans if you have a great score, and they're just going to be, as I said, the traditional banks are going to be much more stringent in what they're doing. The other great thing about having good credit scores, either in your personal name or in your business, and I promise you, even if you have a corporation and you have a D&B number, which we'll cover in a little bit, they're still going to look at your personal credit score, guys. It's just going to happen. But if you have those great scores, you're going to be able to get lines of credit or credit cards from places like Home Depot, from Lowe's, from some of the other vendors and manufacturers that will help you if you're ever doing any kind of rehab. Also, if you need any of that down payment or earnest money, you'll be able to take cash advances, so it helps if you have the credit cards. By the way, a little secret that I'll share with you folks, again, because of what's happening out in the marketplace, did you know that some of the credit issuing banks are actually lowering people's credit limits? You may have had a $5,000 or $10,000 credit limit, and the banks, again, to reduce their exposure, and even you may not have been late or may not have missed a payment, but they have the right, if you read the fine print in the little brochure that came with your credit card, they have the right to lower your credit limits. And a lot of the major banks are doing that. So you may have thought that you had a large enough credit account. They are looking at credit scores, guys. They are looking at credit scores. And if the scores aren't where they need to be, they can and do, in most cases, reduce your credit limits. So it makes your access to capital even that much harder to get at. You know, when you establish lines of credit, either yourself or in your business, your personal scores are coming into play. I know there's a lot of information, a lot of vendors and courses out on the internet that are saying, hey, we can get you business lines of credit, $50,000, $100,000. Well, guys, let me share with you, most of those are for companies where it's not products and services that you need for your business. And again, I'm speaking primarily to real estate investors here, but this really does apply to any small business, that you're going to have a hard time if you don't have good credit scores, because anytime they look at your company or corporation, especially if it's under 5 years, they're going to want to see personal credit scores. Now, I cover that a little bit here in my book about business lines of credit. This is not a business credit course, but I just wanted to share that with you. Also, having access to those good credit scores if you're a real estate investor is you're going to be able to cherry pick those deals that come along that just need a small amount of rehab, and most people don't have the cash to extend to do that quickly. Because let's face it, guys, if you find a decent contractor, your contractor is going to want to have a lion's share of that money up front before he or she's ever going to get started on your project. The days of a contractor being able to front or forward some of the construction until your first draw came from your line of credit or from your investor loan or rehab loan are gone. Again, their business has remained tight for them, so a lot of the contractors are asking for 25–50% of that money up front before they even get started. A lot of times they need that themselves to pay their workers and to get other things set up. Now, when you have great credit, here's the other thing that works for you, because hard money is still available and it's still easy to close in anywhere from 48 hours to 7 days. What's your exit strategy? Because the days of buying a property, flipping it before you even closed on it are pretty much gone. I hope everyone realizes that, at least for the next foreseeable 14, 18, maybe even 24 months. If you've got great credit scores, you're able to get the loan to do the rehab and to secure the property with hard money, but then your exit strategy of either refinancing out, doing a cash out refi, or just pulling out and keeping it yourself as one of your investment properties, same thing. You're going to need to have great credit scores. If you don't have those, sure, you can get into the property, but what are you going to do when you get out? And as we all know, you've got to be thinking of your exit strategy so you don't end up like a lot of investors who are in this current market. That's why you're seeing such high foreclosure rates, as they got into these properties, either the equity fell when the market came down, or they lost that equity, or they were having to continue to pay those hard money payments and they just couldn't continue on. If you personally have great credit scores, you can refi out, you can keep that as an investment property and use it for a cash flow, which is something that you're going to want to do. You know, the other thing, and this is something that's not usually talked about, but if you have great credit scores, you can, what I call, rent out that credit. There's enough folks out there that need access to credit or lines of credit or to business lines of credit that they can't get themselves. So you could partner up with, say, somebody who's got a great deal, who found the property, who has the contacts for the construction and for the rehab, but doesn't either have the credit scores to do it or access to the cash, or like we sometimes find ourselves in, we're doing 2 or 3 deals already, and when another one comes our way, we're just tapped out either from having too many loans in our name at that current point before we refi out. So it's great if you've got great credit scores, you're able to be a passive investor and really attract a large pool of folks to you who are real estate investors, who are experienced at what they're doing, and you're secured because you're in first position usually on the property. So some things to think about for the real estate investor. I'll cover in the next segment why having such high credit scores is so important to you as an individual. So that'll be coming up next.